Hello everyone. It's Elena and Elle C Rhodes. Elle is my dear friend and she is loan consultant. And we are here today to help you guys, real estate investors, to understand a little bit private money lender world. Hi Elle, I'm so proud having you here today and I'm so happy meeting you again.
Hey,
How are you
yeah,
today?
Elena, of course, I want to say thank you first for having me. It's really a pleasure to be here with you and to see you again. I love it. I'm doing really great. I'm really happy to be here and because lending is a bit complex and people, if you don't know about it, even when you know about it, it's a bit complex. But when you don't know about it, it's could be nerve wracking. So I'm glad we're here. And if we can help people make sense out of all of it, that will be awesome.
Thank you so much, Ellie. And I'm happy having you here because I know you're very proficient with this world, and it's very different compared to hard money world. And
Yes.
I hope you can bring lots of value for real estate investors to understand how to be prepared working with private money lenders. It's
Yeah.
awesome you're here. Thank you so much.
Thank you to
Could you please
you.
Awesome. Can you please tell our audience a little bit about yourself, please?
Yes, of course. So my name is Elle, as it says on my screen, I suppose. Yeah. So if you can hear the accent, actually both Elena and I were European girls. So my accent is from Paris. I've been a loan consultant for over a year now. And actually, I do both hard money and private money. So I understand both worlds very well. And
Awesome.
I'm really always happy to help people, with any questions.
Oh yeah, especially if you tell people it's with your cute French accent, it
Thank
brings
you.
even more value. And it's
Thank you.
awesome. You can tell people the difference between hard money world and private money world. It's another value. It sounds so cool. Uh, Ellie, how would you provide an overview of how the private money lending system works in generally, particularly in the context of real estate investment?
Okay, so I mean, that's like a really broad question, right? I'm not sure what I should say, but basically, it's usually for people who want a second position. So if people don't know what it is, first position when you have a property, let's say it's 100K, right? And you
Mhm.
have the first position lender, which is usually the hard money lender, will come at 80% maybe, and you still need to come up with the 20%. So
Right.
some people they just use, so that would be 20K in that case, right? So some people they just use their own money, and some other people either because they don't have it or they might have it but they don't want to use their own money because they want to keep it to keep investing, which is by the way the smart thing to do. You never want to use your own money because you don't want to be tight financially, because the name of the game is to crank it up. So you want to buy more and more. And obviously, if you use your own capital, you can't do that. So that's where PMLs come very handy. So basically, for the 20% left, you contact a PML and then hopefully you find one. They're not so easy to find. You might have some in your network. Otherwise, you contact
Right.
someone like me. And I have a network of private money lenders. And yeah, and there you go. And you
Yeah,
come
right.
okay.
Right. Ellie, I'm so happy you just came up with a phrase second lien position. It's very
Yes.
important to understand it for us and for private money lenders, right? Then if it's a creative finance game, it means first lien always for hard money lender or for homeowner, right? If we are talking about
Yeah.
seller finance, for example, right? And
Usually,
subject to
Sometimes you can ask the owner to go second. I've seen that before, but it's very rare. I mean, who
Oh,
wants to go second, right? So usually, yeah,
oh
when
yeah.
it's a seller finance, you can always ask, but usually the seller will want to stay first.
Right, right. Because lenders that are more professional, right? They mostly knows their games, and they know how to be on second position. And people who lives of passive income, they usually feels comfortable. But homeowners, yeah, like you said, they don't feel comfortable sitting on second position, right?
Of
That is
course.
why we need private money lenders mostly. Yeah, it's
Yes.
awesome, awesome you came up with this. And I just got another question. Could you please, what do you think? What are the key factors that private lenders look on in real estate before deciding to invest?
Well, they have to vet the borrower. They have to vet the borrower and the property, right? Whatever
Right.
you want the money for. So basically, as far as the property, it needs to be. I mean, there is different criteria out there, obviously, because it's private money lender and even hard money lenders. You know, it's usually private money, so everybody else can have a bit of their own criteria going on,
Yeah.
obviously, but in general, for a private money lender who know what they're doing, because actually, before I go into this explanation, I should also tell you guys that there is two type of private money lenders. Okay, so it's very
Oh,
important. Yeah, so let's make the distinction about that first. So you have
please.
one kind of private money lenders is people that know and trust you. So it could be your family, it could be your friends, your coworkers, they have some money parked in the bank and you're like, hey, I can give you 2-digit returns if you invest in my project. And usually those people, their money is parked in the bank. It's not making anything. So if you offer them even 10%, they're really happy. They're like, yeah. And they don't have to do
Yeah.
anything. They just lend the money, you do everything, and then they just collect the check, right? So, but those are people that know and trust you. I've heard even some of them might go down to 8%. So, so that's the first category. Now, if you don't
Okay.
have anyone like this in your network, then you need to approach someone like me, which is totally unconventional because regular broker, they're not going to have private money lenders in their network, right?
Absolutely right.
So you got to find a broker or a loan consultant or connector, it's also called, that will have such private money lenders in their network. And then that's the category number two, because those people that are, for example, the ones in my network and in this broker's network, they're more professional lenders, right? So they're actually very involved. They need to vet the deal, they need to vet the borrower, they don't know you, they don't trust you. It's a total different kind of bird. They're not going to want to lend for a long time. They don't want their money
Right.
tied up. They want to make it, they want to keep working it and make money out of it, right? So they might go up to 6 months, rarely above, and sometimes not even over 3 months, right? So
Yep.
those are short term, and they're usually around 20% or up.
Mm-hmm.
It's a flat return, it's not even annualized. They just want to make their money work and make money out of it. And they spend a lot of time, vetting the deal, vetting the borrower. So it's a lot of work. So of course they want a good return. And sometimes they can go down to 15. So in my network, I'm always trying to have private money lenders who will do 15 to 20%. I don't like to go above that because I think it's too much and it's not fair, especially because it's not annualized. But also there are those the laws that prevents you even 15 or 20% because it's not annualized. Sometimes it's outside of the law, so we have to find creative ways. The usury law, we have to find, it's called usury law. We have to find creative ways to structure the deal in that case.
Yeah, it's so cool. You see, everyone has different experience, and and I would say from our real estate investors' perspective, there are enough another category of private money lenders. There are people who we were able to build really strong and really close relationship with. So interest rate could be various, and terms can be different, and
Yeah.
timing can be different,
Yeah.
right? And you know what else is interested? I've noticed after I switched from my previous career to real estate investors or investment. So there are another category of private money lenders. They can be institutional and then can be direct private money lenders, right? So institutional people who have money, they gather all together, they hire manager who manage their money, right?
Of
And they
course.
pretty much they act like hard money, pretty much, right?
Yes.
Yeah. And
Yes.
but if
Usually it's
you
hard money. Like they have
yeah.
funds, you mean, or family office, yeah. And those are usually, they usually work for hard money lenders, yes.
Oh yeah, yeah. It's so interesting how flexible market is and how it changes everything constantly, right?
I
Yeah,
love it.
for us, yeah, I love it. Chance to learn, right? Yeah, it's you bring so much interesting information, so much value. Yeah. So another category of private money lenders is people who we were able to build good relationship and who work with us directly. So we can
Yes,
negotiate with them, we can stay with them years and years, right, to build the
exactly.
same project. So
Yeah,
this is a like golden task for real estate investors.
yeah.
Oh,
I mean,
mm,
in real estate, the point is to build relationship. Really, that's how you move forward. So,
right.
and whenever you find a private money lender, you want to keep them in your, you want to keep working with them. Hopefully, if you are a good borrower and you give them the information they need, the updates they need, and you pay them back on time, they will want to work with you again. And that's how you start. You need one to start, and then it gets easier. And then also you have reference. So if you need more, if this one gets tapped out, especially if you're very ambitious and you have many projects, they might get tapped out.
Yeah.
But then it's a good reference to get other private money lenders.
Awesome. Ellie, what your experience says, what is the best way to build relationship with uh, direct private money lenders?
You mean
What is the
without
most
going?
important?
You
Yeah.
mean without going through a loan consultant?
Yeah. Yeah. This is
Just
another way. What would you suggest to people?
I mean, well, first of all, you have to find someone who wants to invest, right? And then
Yeah.
usually they will be, let's say it's like your coworker. They don't know anything
Yeah.
about real estate. They've never done it. They just like you and trust you. So I guess a great way will be to update them, Like let's say you borrow it for 6 months. So every month you can show them video or photos and say, look, that's how far we are in the project so that they feel, oh yeah, my money is working, and then pay them on time, of course. So be a good communicator. And that goes for any kind of people using PML, whether it's
Right.
direct or through a loan consultant, right? So
Right.
they like to get the updates. The communication must be really good. So, they have to reply. If you ask them, hey, do you have any update? Don't make them wait. Just reply right away and then pay them on time, like the way the contract was made. And
Yeah.
yeah, that's the way.
Yeah. It's
That's why
awesome.
they
And you
will
just
trust
mentioned
you.
right. Right. You just mentioned this word trust. They
Yes,
trust you. This is the number one, right?
yes,
So we really need to meet people, we really need to communicate with them first
yeah,
and to build these bonds.
yes.
Yeah, yes, I
Because
love it.
lending is about trust, so when you
Yeah,
bring when a borrower comes to me, if we don't know them, we don't have any trust, so they have to show us, they have to prove to us that they're trustworthy. And then once we decide, okay, they're trustworthy, let's try it. Then during the relationship, during the loan, that's when the borrower has to be on their best behavior all the way through, not just until it's been funded, but
mhm.
all the way till the end, so that they can keep working with this lender and get a good referral.
Oh, and I love the word reference.
Yes,
Another great thing about investment, right?
Yes,
Yeah.
reference
And
lending. Yeah.
yeah, even working with loan consultants like you still want to meet reliable people, right? You still to want to make
Yes.
sure this investor knows what he does and she does, right?
Yes.
You still
That's
want to
how.
feel,
Yeah. That's how we vet them. So we always vet our borrowers.
yeah.
Um, we have a few ways. Yeah, we vet the deal and the borrower. It's never
Oh,
perfect, of course. You can never be 100% sure, but we do our best
yeah.
to vet it the best
Oh,
way we
I
can.
would not ask you to open me and ask all your secrets, but could you please tell us a little bit wider? What are you looking for? What do you check
Yeah.
with? How do you vet borrower and how do you check property?
Okay. So to vet the deal, it has to be okay. So yeah, that was the original question when I went into explaining the two different type of private money lenders. So um, the second kind of private money lenders, the ones I work with, right? We understand they're more professional, they do a lot of work, they're going to ask for more, right? And those people, they also usually have, because they're professional, they know what to do and what not to do. So, one of the first thing that most of them apply is 75% max of the loan to ARV. So that means all the loan combined cannot be more than 75% of the after repair value. So in our 100K example, we had a first position at 70, right? No, at 80, sorry, we said 80%, so 80K, and then we needed a PML for 20K, the 20%.
Mhm.
So in total, our loan will be 100K, correct? The 80K plus
Right.
the 20K. Let's say the ARV, I mean, I'm not so good at calculation, but okay, let's just say the ARV is 200K. So
Okay.
what's 75% of 200K? I think it's 150, right? So that means all the loan combined, first and second position, cannot be more than 150K. And in that case, it would work because it will only be 100K. So if it's over, let's say now we need 170 for the loan because we also need rehab, but
Okay.
our 5% ARV is 150. So we're 20K over, right? In that case, we can use a collateral if they have a collateral. They don't always have
It
it,
will
but
be my next question.
yeah. So in that case, we can use a collateral, which should also be 75 ARV, loan to ARV max.
Right.
So and this is very generous. I mean, I work with this is like the most generous PML. Some PMLs they will want to be at 70%, for example, loan to value, not even ARV. And let me explain why we need that so that people understand. It's not just out of the blue. It's because for people who don't know that, first, like we said, there is first and second position. First position, which
Right.
is usually the hard money lender, all these matter in case the borrower defaults. So if the borrower stops paying their loan back, what happens? It's going to take time. We need to hire lawyers. It needs to go to court. It's not going to happen in one day, right? All this time, all this money, late fees are piling up. So the hard money lender, not only they owe the principal, they owe all the interest for every month that they're not paying, plus they owe late fees. So all of this
Right.
is piling up, which means that by the time the foreclosure happens, like months down the road, with
Right.
the first position is the one who get the money first. So they will be paid back for the principal, all the interest, and then all the late fees. And by that time, plus you can imagine all the lawyer fees and court fees and all of that. By that time, there is nothing left for the PML
Right.
in own position. So that's why even 75% ARV is very generous. And that's why some PML, they just go to 60% loan to value, not even ARV.
Oh,
So
oh, oh. Mm-hmm.
so that's the main thing they look for the property. And then as far as the borrower, we want to see experience. So in the last 3 years, they need to have completed at least 3 similar projects. And
Okay.
they need HUDs to prove it, right? It has to be on their name or their LLC name, but we need the HUDs to show that it's true, because people can say whatever they want, obviously. And then on the HUDs, there will be a name of the lenders. If they use the lender, which usually people do. We prefer to look at private money lenders, but if there is no private money lenders, we will call the hard money lender and make sure and ask them, how was it with them? Did they pay their interest in time? Did they pay the principal? So we look for
Which is
reference.
very fair. Yeah, very fair. Right. We
So
always
that's
want to protect our lenders, right?
exactly. For me, it's very important. I'm not going to bring, like what I'm telling you, those criteria, I actually look for them in my borrowers. If they don't have it, then I will not bring it to my lenders. Because even you can have a lender that you met yesterday and they don't know anything, and you could bring them any deal, right? But at the end of the day, you don't want to be responsible for anyone losing money. So I
Right.
always bring I mean, this happened to me at the beginning when I started, unfortunately, I had two borrowers who defaulted. Hopefully, the lender is going to see the money back, but it's really bad and really sad when it happens. And I never want that to happen again. I didn't know all those things back then. It was so we just scrambled it together. The lender didn't know, and the lender was okay with the deal. So I said, okay, the lender knows better than me. They're okay with the deal. And then, unfortunately,
Mm-hmm.
and it happens to a lot of people. I mean, in the private money world, unfortunately, a lot of borrowers default. So that's why you really need to be sure that you vet the deal very well. You vet the borrower. So another way we vet the borrower, we do a little background check. It's a really simple
Yeah.
one. It's what landlords do for tenants. So it's like it costs them,
Ah, okay.
those. So it costs them
Yeah.
about $45, and it's just a quick like credit report and.
Yeah.
Do they have any
Yeah.
criminal activity? Did they pay their rent? If they ever rented, that kind of thing. So it doesn't mean much, but also if the person is willing to do that, it means that, like, let's say someone doesn't want to do it. It's like, well, we can't work with you because you're not even trying to look good in our eyes. So
Right.
either
Right.
they have something to hide, and if not, they just don't want to be bothered. So in that case, we can't work with them. Oh, the vetting is also not only we look if the right, if the property is good, if the borrower seems good, but it's a lot of work for both the lender and the borrower. So we are vetting the borrower like that too. We see how
Right.
fast do they reply, are they okay with it, do they remain friendly, do they get annoyed. All of this is very telling, obviously.
Yes, absolutely. And the good sign is, I would say all people who I know, I mean real estate investor, we all put interest for our private money lender first. We realize
Yeah,
we should do everything to make
yeah,
sure our lender will get their investment back and they will receive their monthly check. And
yeah,
only then we should care about our income. Otherwise, it weighs to nothing, right? Yeah,
yeah,
and we realize,
exactly.
yeah. And Ellie, you just mentioned most of your lenders are very expecting to see uh, for so investors should has experience with three similar properties, right?
Yes, yes.
But do they realize the mostly real estate investor, we have solid community of real estate investors around us, and we always have can partnering with more experienced people, so we really always have solution. Do they realize it? Do they know it?
Yes, of course. So let's say, like, I talk to someone and they say, well, this is a fix and flip. I need the gap. By the way, in PML, it's not just gap funding, it could be also first position. Okay. Don't think it's only
Yep.
second position. We love first position even better, but often it happens to be second. So now let's say I have this borrower, they want to do a fix and flip. They need either, we can do 100% sometimes. So that will be
Hmm.
first position. So let's say like that.
Yeah.
So people don't think it's only second. So let's say this borrower comes to me, they need 100% for a fix and flip. Okay. So the numbers look good with the property. I think, my 75 ARV looks good. Then I ask them, it's a fix and flip. I ask them, okay, how many fix and flip have you completed in the last 3 years? And they say, oh, zero. I'm a brand new investor. So I'm like,
Okay.
okay, unfortunately, uh, you need some experience. So, do you have someone in your network that could jump on the LLC with you that has at least 3 experience with HUDs? And
Awesome. Mm.
50-50. Sometimes they say, yes, I do. And sometimes they say, no, I don't. But to be honest, it's a
Mm.
fix and flip. It's very complicated. You don't, it has so many moving parts. Like you don't really want to start with a fix and flip if you've never done any real estate. It doesn't make sense. It's about like having partners. At the beginning, the real estate game, at least the way I see it, it's a learning game, right? So
Yes.
you start by saying, I'm going to make so much money tomorrow. No, you say, I'm going to learn. And the best way to learn, of course, you should get some kind of mentorship or at least follow some kind of a program. But also, when you start, you shouldn't think, I'm going to make like 200K on my first deal. You should think it doesn't matter how much money I make on the first one. What matters is that I'm learning. And so I'm going to get a
Yeah.
partner. I'm going to make less, but I'm going to do it with someone who has experience like that. They're going to show me the rope. And until I feel comfortable and I understand everything, then I'm going to do it on my own. And that's when I'm going to really make a lot of money. But when I start, it's not about making money, it's about learning. So
I
it's
love
not
it.
really
I
smart,
love it.
right?
Yeah.
To just jump
Yeah.
in on your own. You want to have a partner who knows what they're doing. And that's how I did it, by the way, when I started too. I always had partners. Even I know I said that my first deal, some of my first deals, right? Two of them, the borrowers didn't pay us back, but I was with someone who had a lot more, with another loan consultant who had a lot more experience than me, but obviously not enough too, because we got. But this could happen to anyone, by the way. Even if you have the
Right.
best, you always need to know that's always a risk, right? It's not lending is not 100% risk free, even if you
I
have the
love
best.
these words. I love these words. Everyone should realize business is
Yes,
risky and we responsible,
yes,
all responsible for the final result, right? I love
yes.
it.
Even if we have the best property, the best borrower, anything could happen. You
Yeah.
never know. Someone might be amazing and suddenly they change and they don't care anymore and they're moving on the other side of the earth and you never hear from them again. And for 20 years, they were the best borrowers in the US. Anything could happen,
Yeah.
right?
Life happens, right? You never know. And everyone should
Yeah.
realize, should predict. Yeah, and this you mentioned about partnering with more experienced
Yes.
investors. This is really brilliant. And mentorship is could be really really helpful.
Yeah.
And actually, mentorship for the smart people who started investing in real estate, they usually participate some kind of mentorship, and it helps them to build network around them. This is where we get future partners, future JVs, more experienced, right? To make deals with them, to be more
Yes.
reliable in front of money lenders, right?
Yeah.
Yeah,
Exactly.
it's
Even if, for
awesome.
example, if you want a hard money lender, but your credit is not so good, you should also partner with someone who
Oh,
has a great credit because you get much better terms, much better rates. If your credit is not so
yeah.
good, you're not going to get good rates. If you partner with someone who has a great credit, then right away it's going to change everything, right? So, yeah.
Oh, oh, well, every time I meet you, I learn so much from you. I so much appreciate it. Thank you so
Thank
much.
you.
Yeah, and you just mentioned credit. So could you please tell us a little bit more about how private money lenders look at the personal credit score and business credit score? What is the difference for them, and what is more important for them?
Sorry, did you mean private money lender or hard money
Right.
lender? Private
Private
money.
private money.
They don't care usually, unless, I mean, we do this. I was telling you that we do this background check. It happens to have the credit score on it, but usually private
Mhm.
money lenders, they don't care at all about the credit score. Some of them don't even require a little background check. So it's not always, right? And
Mm,
I've never
mm.
had, of course, there could be always, like I said, there is so many private money lenders out there, but I've never had any of mine caring about the credit score. But I mean, or unless when you borrow from a private money lender, you need to have an exit strategy, and you have exit strategy number one, and you have exit strategy number two in case the number one doesn't work. So, what are those? Usually, they're always either it's a fix and flip, so you're going to sell it, and once you
Yep.
sell it, you're going to pay back the lender, right? Or it's a buy and hold and you're going to keep it. So in that case, you're going to refinance it, and that's how you're going to pay the lender.
Awesome. Yeah.
So in case of let's say this is a buy and hold, right? It's not a fix and flip
Yes.
anymore. They want to buy it and hold it and rent it. Well, in that case, they will need a refinance because remember, first a hard money loan, if they have a hard money loan in first position, those don't last
Right.
very long and they're high interest. And then our PMLs, they
Right.
don't want to be on more than 6 months. So they will have to refinance in the next 6 months. So they can buy out the hard money lender, the private money lender, and then they can get, for example, a DSCR loan where they can have 30 years at much better rate, right?
Yeah.
Well,
Yeah.
a DSCR loan, that's a regular money lender who is going to give that. And those, most like 99% of the time, they will require a credit score. So let's say I have this
Which
borrower,
one? Business credit score or personal credit score?
personal, personal
Okay.
credit score. Um, I mean, both. I guess if they have a business, it could be the business credit score too. But usually, our money lender, they just ask for the personal, not the
Mm-hmm.
business. But you could have
Mm-hmm.
both, I suppose. Um, so basically, so let's say I have this borrower who comes to me, right? And they're like, okay, I have this buy and hold. I'm going to refinance it 6 months. Then I will ask, okay, what's your credit score? If it's a good credit score, I'm like, good, then we can find a refinance, no problem. If they say, oh, my credit
Mm.
score is 500, I'm like, okay, well, it's going to be difficult to find a refinance. Do you have a partner who can jump with you on the LLC that has a better credit score? So that will be the only time a private money
Mm-hmm.
lender really would care about the credit score
Yep.
if the exit strategy is refinance, because obviously, yeah.
Oh, yeah. So much great information. Thank you so much. I'm so proud
Okay,
having you here today. You brought so much
thank
value to
you.
people. Yeah. And I would love, please, if you don't mind, you to explain people a little bit more how works if ARV is if the amount a borrower requests from private money lender means more than 75% of ARV. You mentioned collateral, right? How it
Yes,
works and what means
yes.
collateral.
Okay, so collateral, it's another property that they own. That's called a collateral. So you have the subject property, the property they're borrowing for. So let's say first position, 100% fix and flip. That's the subject property. And then let's say it's like you mentioned, it's above 75% loan to
Yep.
ARV. In that case, I will ask, okay, do you have a collateral with equity? Which will be also 75% loan to ARV max that we
Okay.
could borrow on. So what does all of that mean, right? So a collateral, yeah, it's an other properties, not the subject. Like often, unless if it's their first deal, but they might have their private residence. Some PML are okay to borrowing from the private residence, some are not. So it depends on the PML. But if it's a first time borrower, obviously they're not going to have other properties, other investment
Yeah,
properties, right? But they might have
yeah,
their principal home, their private home, or if it's a more seasoned borrower, yes, then they will have collateral. Now, the question on those collateral is what's the equity? The equity means how much
right,
money is there between the loans and the property value. So let's say I got someone today and they say, yeah, I have collateral. I say, okay, what's, let's say this property here, okay, this collateral. Okay, tell me, what's the equity, or is it 75% loan to ARV or loan to value in that case? Because there's
right.
not going to be repair probably if they already have it, right? Um, so they might tell me, okay, the property, I have a loan on it for 100K left. The property value is 300K in that case, and I only need 20K. So it's no brainer because we have 200K equity. That means money that they can borrow from, right? And it's way lower than 75% of the value. So in that case, it's fine. But if they have one, they just bought it recently and they still have 90% of loan on it, then it's not going to be possible.
Oh
Does that
yeah,
make sense?
yeah,
Because it's
yeah,
going to be, the equity is going to be way too small, and it's going to be over. That's what we call over leverage. Means too many loans on it already. We can't add one. And the best
mm,
obviously is if they have what we call free and clear collateral, meaning there is no loan on it. Some people have that.
yeah,
It's more rare because usually people, as soon as they have something free and clear, they're gonna, if they're a smart investor, they're gonna borrow on it, do a refinance so that they can, or a cash out. That's called a cash out when it's free and clear, so that they can invest in other properties, right? But yeah,
yeah.
does that make sense?
Yeah, it's everything makes sense. Yeah, I love everything you just teach us. It's brilliant. And let's come a little bit back to the moment when you mentioned all private money lenders loves if potential borrower provides minimum two exit strategies, right?
Yes.
Yeah, it's great. So, per my understanding, we a smart investor should always make sure first our property works gives cash flow with long term, right? To make sure this project never will fail. I mean,
Unless it's a
less
fix
will
and
fail.
flip. Unless if it's
Oh yes,
if
yeah,
but
yeah,
if
yeah.
it's a buy
But
and hold, yes, yes. If it's a
buy and
buy
hold,
and
yes,
hold, yes.
yeah.
But
So mostly, go
go
ahead.
ahead, sorry. Well, okay,
Sorry, sorry.
what I wanted to say, Lena, is that they don't care about the cash flow so much. The PML, the cash flow is good for a DSCR loan because that's another story. DSCR, which is what our money lenders give, they are calculating on the cash flow, right? But a private money lender do not care about your cash flow because your cash flow will not be enough to pay them back. Usually they lend, I said 20K now, but actually 20K is really rare. It's usually around 50, 70 or above. So the cash flow is never going to give that back. They don't care about the cash flow so much. What they care about is either you are going to sell it or you are going to refi it. And one of those is going to be the first and the second strategy.
Yeah, yeah,
Or
yeah.
you
But
can
you know,
sell
the
another
mostly,
property. Sometimes
oh
the
yeah,
exit
yeah,
strategy could be on another one that you're going to sell in the next month.
right,
That's good too, or that you are going to refinance, right? So it could be the subject property or it could be a collateral, but
right,
they don't care about the cash flow
right.
because that's never going to be enough to reimburse, or it's going to take forever.
Yeah, right, right. But you know, due the fact our audience right now is mostly creative buyers, so
Yeah.
we realize the cash flow will give us let's say, guarantee our lenders will always will receive their monthly check. That is
Yeah.
why us as an potential borrowers, we really
Yeah.
need to make sure our property gives cash flow. And we always in hope to find lenders who will be willing to stay with us longer time. So if we will uh, provide the property project that gives really good cash flow, right? It will guarantee we can satisfy our lenders' expectation. They receive their monthly check and they potentially can stay with us longer than 6 months, than 9 months, maybe than year, right? Everything about relationship. You mentioned it a couple times and it's great, right?
Yeah, totally. So, Elena, in that case, you're more talking about, again, the first kind of private money lenders, the ones that know you and trust you and
Yep.
like you, right? But like, if you come to someone like me and they don't know you and they're more professional, um, it's very different. First of all, they're not being paid every month. So that's
Yep.
something we didn't mention. So
Oh yes.
it could be
Please.
negotiated, but I've never had it personally. I know it could happen, but usually it's a balloon payment at the end. So when the
Mhm.
exit strategy happens, whether the sale or the refinance, that's when they get the principal and the interest. So they don't. That's why they don't care about the cash flow, because they're not never gonna get monthly checks. They're just gonna get a balloon payment at the end.
Yeah,
Make
there are just
sense?
different two different strategies, right? Like
Yes.
it just depends how we negotiate with people,
Yes.
how we
Yes,
will
of
work
course
with them.
you can ask them that, but even if it's a, I mean, they're gonna get their interest regardless if you cash flow or not. You see what I mean?
Mhm.
They really,
Yeah, yeah, yeah.
for them, I mean, they care because they don't want you to lose money. Obviously, they're good people,
Yes, yes.
right? In that sense, but for them on the deal, it really doesn't make a difference, because regardless if you cash flow or not, they're going to
Mhm.
get 15 or 20% at the end. Or even if you
Yeah.
want to negotiate, okay, I'm not going to give it to you at the end, I'm going to give it to you every month. They don't care how it comes, they just know,
Mhm.
you know what I
Yeah,
mean. So
yeah, right, right, right.
it's definitely, the cash flow is irrelevant to such private money lenders, unless it's the first kind, like you say, they know you, it's your grandpa, for example, and you say, Grandpa, can you help me for a few years and I will pay you every month? Yeah, in that case, it's a different story. But like if you go more towards the professional PMLs, right?
Mhm.
They know they're going to get their 15 or 20 or more percent back, regardless of your cash flow. Make sense?
Right, it makes sense. Yeah, thank you, Ellie, so much. Yeah, and as a conclusion, I would like you, if you don't mind, to give our listeners a couple advices. What would you suggest to understand to all of us in terms of working with direct private money lenders, which you described as in our friends, our family members, our neighbors, people
Yeah.
from our network, right?
Yeah.
And with people, with lenders who are kind of institutional private money lender. What is really important for us to understand,
I
per
mean, to
your
be honest,
opinion?
yeah, I mean, to be honest, that's not really what I do. So I'm not that, I don't work with such private money lenders, obviously. So,
Mhm.
but do you mean to find them and to bring them, to close them? Do you mean to, so that they want to land on your project? Is that what you're asking?
I mean, whatever would you like to share with people? So anyway, if you don't work with, I mean, if you are not direct private money lender, you
Yeah.
still have experience working with these people, right? And what are the key points where your understanding is about private money lenders?
I think, like, let's say if you want to find some, right, that will be willing to land on your projects. First
Yeah.
of all, even if it's not, let's say it's not someone from your family or friend, or it's not someone who knows you, but you go to a convention where you know there's people who have a lot of money, right? And that's a great place to find private money lenders, obviously. Well, you
Yes.
just have to present them with the project. You give them a pitch, like the elevator pitch. Again, this is not my specialty, so I can't. Don't take all my words for granted, but you have to make them feel like they can trust you, obviously, right? And you know what you're talking about. They have to feel that you're really professional. Okay, you know what you're talking about. You know your project. You know how to make profit. Of course, it helps if you have experience. If you have no
Yep.
experience, that will be more difficult. So that's again, then just bring a partner on your LLC and use their experience and say, that's what we have done, or that's what my partner has done. That's you. Remember, the word is like trust. They have to trust you and they have to feel
Yeah.
really comfortable, even though there is
Yep.
always a risk. But they have to know if they invest in you, you're a good person, you're solid, you know what you're doing, you know your numbers. If they ask you question, you know what you're talking about. You're not like, oh, I'm not sure. You know what I mean? So, and that comes with experience. Obviously, we always come back to that, because when you don't have experience, of course you're going to be a bit unsure. You're not going to know everything. And
Right.
with experience will come the great personality and the great confidence, right? So, but anyway, if you don't have that yourself, put someone in your team that has that has the experience, the confidence, and then you can talk about them, right? So that's what you need to present to a private money lender, that you know what you're doing, you know your numbers, you have, or someone on your team has a lot of experience, you're not going to waste their money. And then you can discuss with them and see what's important to them. Because again, if they're not more used to do it, or I say professional, but it's
Right.
not really well, but you know what I mean.
Yeah.
If they don't know anything about real estate, if they never invested in real estate before, they will not know anything. So basically, you're going to have to teach them all these things, because they don't understand or know anything about it. And then you can ask them what kind of return will feel good to them. And you'll be surprised. Maybe someone says 6%, who knows. But
Right.
and then, like I said, like let's say now you closed, it's called closing, you closed a PML, then just make sure, like what I was saying in the beginning, maintain a great relationship with them, explain them everything, unless they don't want to know. You have some people, the ones who just say, hey, I just trust you, take my money, don't bother me, I don't have time, just pay me my check at the end. Okay.
Oh.
You
Oh.
have some like that, obviously, right? But if
Yeah.
it's someone
Oh.
who wants to be a bit involved, you ask them, how involved you want to be. Do you want me to give you updates every month? I can send you video, pictures, or, you gauge them. What kind of private money lenders do they want to be? Do they want to be invested, or do they want to get the check and not be bothered? So whatever they want, and you got to respect that. And of course, whenever they ask you something, whenever they're communicating with you, you got to reply right away and make them feel good. Not that they need to chase you, that you don't want. You remember, they have to trust and be comfortable.
Correct.
So always make sure they feel that. And then, of course, pay them on time and the amount you said you were going to pay. And then that's it.
Yeah.
You get a PML for life if you do that.
Perfect. Perfect. You see, another evidence to me then everything based on human relationship, right?
Yes,
Everything. And ask real estate investors who always need private money lenders. And you
always.
guys, private money lenders, we always should care first about human relationship, because if
Yeah,
nobody, or at least one side in this relationship, doesn't feel confident, doesn't feel comfortable
doesn't work.
communicating with this person, it never will gonna work, right?
Yeah, yeah,
Yeah. Everything about
exactly.
humans first,
Yeah, yeah,
right?
and that's the game of the real estate. Whether you do lending or investing or wholesaling or whatever you do, it's all about like creating a great community where you trust
Right.
and know each other and feel comfortable, and from there you can grow, of course. Otherwise it's going to be a bit more difficult.
Yeah. Right. And I love how our mentor teaches us always we should be very conservative. We should take all decision with cold head. We had we have to get rid of all our emotions, uh,
Yes,
working with lenders, working with numbers, with money, right? We should be
yes,
very conservative. We should predict different scenarios and should take all responsibility, all personal responsibility on
yes.
everything happens between us, right?
Yeah,
Between lenders and borrowers.
I agree. And I love that you said that. Actually, that's another thing very important, Elena, being conservative, because you don't want to be like, oh, you don't want to inflate the numbers to make your project look better. Like, let's say the ARV is 150 and you say, oh, well, the ARV is 200. It's really silly because anyway, they're going to find out because we look
Yeah,
at the, don't just look at, okay, 200. No, we're going to do the comps. We're going to check everything. Either the
absolutely,
PML,
absolutely. Yeah,
either the PML, they do it themselves, either they have an underwriter. So they're going to check it. Everything you say is going to be checked. You have to know that, right? We're not going to take it
right,
at face value. We're going to check everything. So, of course, if you inflate everything, then already the credibility goes down the drain, right? It's like this person is trying to like screw me over from the get-go. They're not right. They're not giving me
right,
the clear picture. So it's already kind of a red flag. So it's not a smart thing to do. Just make sure. Usually there is some kind of a questionnaire that you're going to answer. Just make sure
right,
you get the correct numbers. Don't inflate anything. Don't lie, because everything is going to be, we're going to ask for proofs, so if you cannot prove it, or
right.
then already you put yourself in a bad position.
Yeah, right, right, right. Be okay, be good in from starting from the beginning, right?
Yes, yes,
Realize your personal responsibility on everything happens between you and your lender. Yes, it's truth. It's truth. I agree.
exactly.
Elle, thank you so much for all brilliant information. I hope our guys who will watching us, they will get a lots of. I remember when I spoke with you during couple of times. I after I got stepped out of our conversation, my brain was full of information, and I was need to
Yeah.
sit and to digest all. And every time I learn from you more and more and more, and I really realize how much we need to understand private money,
Mm,
personal real estate investors to be in
mm.
this game professionally. It's so much to understand about
You,
lending.
Elena, lending is so complex. Like, I've been doing
Yeah,
it for over a year and still I'm learning, it's crazy.
yeah,
It's such a complex world. There is so many things going on. It's not complicated, but there is so many moving parts, so it takes a while until you can start. And even I don't understand everything yet, and I'm still learning every
yeah.
day. So yeah, it's a
I can
huge, huge
imagine.
world. That's why
I
it's
can
great to have
imagine.
someone like me that can help you, because on your own it could be a bit difficult to, because you have to learn all of that on top of it. So it's a lot to learn for sure.
Yeah, you need to know a lot.
Yeah.
Yeah. Thank you so much, El. I hope we will make another podcast with you with more even more brilliant information to people to make this business more uh, workable, doable for all of us.
Yeah.
Thank you so much, my friends, and thank you so much for all golden information, for all golden nuggets.
Yes, and I thank you so much, Elena. And I wanted to say, if people want to reach me, if you need a loan, or even if you have loan questions, you can always reach me. I think, Elena, you're going to leave my contact right in the.
Yes, yes,
Yeah,
absolutely. I will put your Facebook page
yeah,
under our video, and people would
yeah,
be able to reach you directly.
yeah. So any question you guys have, it's always my pleasure to help people. So even if you just have questions about lending, you're always welcome to reach out to me.
Thank you so much, Elle. and see you next time. Thank you, guys. Thank you
Thank
for
you so
watching our
much.
podcast.
Bye,
Bye
everybody.
bye.